For the Btec Tech Award Component 3, we're going to be looking at the Statement of Financial Position. And we're going to be working this out for the odd job shop. We've got the financial information here, and in a moment I'm going to show you how to construct that into a statement of financial position. So you can see that the statement of financial position is here, and we've got our fixed assets, our current liabilities, we've got our net current assets, total assets, owner's capital, and retained profit. We're going to start off by looking at our fixed assets, and we've been told there are 4 of them. So down below, we've got our fixed assets of shop and yard. Things they own, important to the business, they plan to keep them, £80,000. Fixtures and fittings are like your tables and chairs and stuff like that. They have £25,000 worth of those. Again, they need them to run the business. They are a fixed asset. The van is worth £11,000. They're planning to keep that. And the equipment, like the wood turning stuff, £55,000. So we have our 4 fixed assets. To get to figure A, we total them up. We're next going to be looking at their current assets, the things they own and they plan to sell or use up within a year. We have 2 of these, inventory and cash. Remember, inventory is just a posh word for stock. So in this one, they make chairs. They've got £100,000 worth of chairs and chair material. And they have £44,000 worth of cash. So the current assets, the money they have to hand pretty much is 154,000. I added those 2 figures together and we got B. We're now moving on to their current liabilities. These are the things they owe and they expect to pay up in full within a year. We've got 1 which is creditors. Now, if you remember, creditors means people who we owe money to. So this could be electricity bills, bills for buying suppliers, things like that. So we've got 1 at 25,000 and that becomes our figure C. So we've got A, B and C. Now we're going to work out our net current assets. Now what this means is how much money do they have available? So their current assets are the things that they can turn into cash, liquid assets quite quickly. And these are the bills they're going to pay. So what we do is we take B and we minus C and it will give us D. And in this case, they have £129,000 worth of net current assets. That means they have £129,000 more than they require to pay their liabilities, which is good for this business. It shows they're in good health. If it was negative, it would mean they didn't have enough money to pay their bills and they'd have to look and take some actions to make sure they could. The next figure we're going to do is our total assets less our current liabilities. So our total assets are our fixed liabilities plus our current assets minus our current liabilities. So we have A plus B minus C, £300,000. So how did we pay for that £300,000? Well, first of all, we had owner's capital. They put in £200,000 at the start. So we have £200,000 as our owner's capital. They have retained profit from previous years of £100,000. So 200,000 to start it, 100,000 retained profit. If we add those 2 figures together, figure F, we get £300,000. So this is how much the business is worth, and this is how they have paid for it. And this is their statement of financial position.